China is offloading billions of dollars in US Treasuries, and the reason why could change all Bitcoin investors' lives. This is a calculated move with deep implications. When one of the world's largest economies starts dumping US debt, you better believe it's about more than just numbers on a screen. This is a global power play, and it's already creating ripple effects across international markets. Currencies are moving, gold is spiking, confidence in the US financial dominance is being challenged. And while most people are still staring at stock charts, Bitcoin holders are being positioned as the biggest winners in this whole play. So why do you think that is? How does China offloading their money in US Treasuries affect you as an investor? At the end of this video, I'll show you one detail that I feel everyone has missed. One that could give you a massive edge, so make sure that you stay through this whole video. Let's get started. The bond market is imploding. Pay attention, Bitcoin holders. This is going to be an important video for you. So I recently stumbled upon this post on X, and it said, just in, Asia's richest investors are abandoning the US dollar in favor of Bitcoin and gold. And that's being said by the investment bank UBS, which is quite a big and significant player within the traditional financial system. So here is what's going on. The UK just overtook China as the second largest holder of US Treasuries. This hasn't happened in the past 25 years. So here you see a chart of foreign holdings of US Treasuries in billions of dollars. And you see different lines resembling different countries: Japan, China, UK, Luxembourg, Cayman Islands, Canada, and Belgium. So what we are observing is that China went from one of the biggest holders of US debt to now becoming the third biggest holder. And Japan, the dark blue line, is still number one. And we're seeing that UK is actually loading up on US debt. So you're seeing now here at this intersection, the UK just overtook China, which hasn't been the case for a very long time. Here you see from this moment onwards, China started to accumulate US debt. So what is happening right here, this pink line, that is what is currently causing a lot of fear in the market, and it has a lot of implications. And in this video, we're going to uncover why. So here, an article by the South China Morning Post. China cuts US Treasury stockpile, dropping to number 3 spot among foreign holders. So that's exactly what we saw here in this chart. So China's move shook more than headlines. It hit the heart of the bond market. The bond market is practically going off the rails right now, because we're seeing that China is dumping so many bonds on the bond market right now. They're offloading their US debt. Whenever US Treasuries get dumped on the market, it means that they're basically selling below, selling at a lower price, meaning that the yield on those bonds starts to go up. And that's what we're observing right now. The US bond yield went from somewhere around 2% to now approaching 5%. Now, why is this important? The 10-year Treasury it determines all interest rates in the system. It determines the mortgage rate. It determines the rate that you're going to get on your savings. It basically is directly proportional to the interest rate that people are charging. So China has an influence on the US interest rate by dumping their US debt on the bond market. So they're offloading, and this has massive implications for the US. Why is it so important, especially right now? Because this high interest is a very big burden for the US right now. So this tweet is saying the 10-year US Treasury yield is rising at the same time the US dollar is falling. Mind the gap below. US debt has become a real as opposed to nominal credit risk, with a debt to GDP ratio, so meaning the proportion of debt that the US is holding compared to their total economic output of 130%, so meaning that the debt is much larger, more than double the size of the total US economic output, so that's quite high. A 7% fiscal deficit, so meaning that they have a shortage, they're spending more than they're making, and the world's largest trade deficit. So they're importing more goods than they're exporting. So all of those are looking very unfavorable. The US dollar is likely to fall very sharply soon. So that's all in accordance with what some believe is going to be called the Mar-a-Lago Accords, so the controlled devaluation of the US dollar in order to stimulate trade. So here's an article on Yahoo Finance. Dip buyers support stocks as bond market assesses US downgrade. So what is this? Well, recently we saw the credit agency Moodys downgrade the US debt from the highest rating to 1 below, meaning that the US right now is not ranked amongst the highest quality debt in the world. And this is not great. This will probably result in less trust in the US for repaying its debt. There will probably be less buyers for US debt, meaning that they will probably have to further increase the interest rate in order for them to attract new investors that might be willing to buy up their bonds. Here on top of that, Ray Dalio announced, if you don't know who Ray Dalio is a billionaire hedge fund manager. And according to his analysis, he's saying that credit agencies like Moodys, who recently downgraded the credit rating of the US, he's saying that credit agencies are understating sovereign credit risks because they don't include the greater risk that the countries in debt will print money to pay their debts with devalued currency. So at one point, when countries are so deep in debt, just like the USA, which currently has $36 trillion of debt. There's this website called the US Debt Clock. You can find it on Google. And you see this clock of the US debt going up and up and up. And literally every time you blink your eyes, the US debt is up with another million. That's how quickly everything is going up right now. And yes, you have DOGE, the Department of Government Efficiency, which is cutting some unnecessary weight, fraud, and abuse within the system. But those cuts can't outweigh the spending. Donald Trump is not going to run, is still going to have a massive fiscal deficit because he's going to spend a lot of money, mostly on defense. So Donald Trump is going to be the first president that's going to use $1 trillion defense budget. So he's actually ramping up the spending as well. So he's cutting some expenses left and right, but that doesn't make up for the massive spending that he wants to do. So in order for those economies to stay afloat and not to drown in debt, they need to print more money to pay off that debt, resulting in higher inflation. And with higher inflation, you'll see that the poor and middle class will start to struggle. Their excess cash will start to decrease. And if they have excess cash, they have less spending power. It means that they can buy less products and services. And ultimately, this will lead to the demise of an economy. Now, let's go back to those rising yields, which are turning into a massive problem for America's finances. Imagine that you have a 10-year mortgage for your home. Okay, you have a 10-year fixed interest rate mortgage. And suddenly, after 10 years, your interest rate starts to shoot up. And then your debt servicing capabilities will start to become very complicated because you need to repay your debt, plus your interest burden on top of that is increasing. And that's exactly what the US is facing right now. So America's credit card bill is getting very wild. Why am I saying this? Because people use credit cards in order to borrow from the future, to buy products right now or to buy services right now and to pay it off in the future. So the US is the #1 credit economy in the world. Everything is bought on credit. They love borrowing. And when the economy is great, then borrowing is amazing because you can scale very rapidly in the moment. You can, as a result, then maximize your output to satisfy the current demand. And you can do that very rapidly and on demand. But when things are not looking that great and you have a very big debt burden and very big interest that you need to pay, then things are actually going to become a lot more painful. And here you're seeing this chart that interest payments on US debt compared to federal receipts. So those are the income that the US government is basically making. most of it is through taxation. So here you see interest payments on debt, and here you see federal receipts. So what you're seeing is that the interest payments on debt are rapidly increasing. Here you're seeing it's almost going exponentially up at this point. It's like it's a hockey stick inflection. Yeah, it's going to be an interesting time ahead. Here's another tweet. For the first time ever, US interest payments on debt, 1.1 trillion, now exceeds defense spending of 1.1 trillion, 1.10, and this is 1.11 trillion. So rising rates plus growing debt is a long-term challenge for fiscal policy. Exactly, because the bigger your debt becomes, the more interest you need to pay. But if your interest rate goes up, then you need to pay even more interest. And if that cycle keeps on continuing, then at one point countries go into a debt spiral, meaning that there is no way that a country can pay off its debt ever. And then it basically goes bankrupt, because you need to keep in mind that governments are just like businesses. They need to make a profit. They need to be financially healthy. Otherwise, they're not able to survive. And even countries can go bankrupt. This is something that has happened before, and it will probably happen in the future. In fact, Ray Dalio wrote this book called The Changing World Order. And in this book, he explains that every great empire in history, the Dutch Empire, the British Empire, the Spanish Empire, the Portuguese Empire, at one point they used to be the global powers on the world stage. And their currencies were the world reserve currencies. But due to excessive money printing, inflation, waging wars, internal political conflicts, they all eventually came to an end. And according to Ray Dalio, one of the greatest predictors of how close an empire is towards its end is whether they are printing excessive amounts of money just to be able to survive just a few years longer. And that's exactly what we're observing in the US. So with the Trump presidency and all of the things happening right now, I do personally believe that the US has prolonged its lifetime just a few more decades, maybe longer, maybe shorter, but it is under a lot of pressure right now. Here you see the debt maturity schedule. So the US is $36 trillion in debt. That's 36 with 12 zeros behind it. And you see that in, is this in billions? Anyway, so here you're seeing that over time, 2025, this year, 2026, 2027, 2028. So over time, the US needs to either pay off that debt or refinance that debt, meaning that you take out another loan so that you're going to issue more bonds in order to pay off the old bonds that are maturing. So that's oftentimes what happens. You roll over the debt into the next 5, 10, 20 years. But if you need to refinance that debt, but at a higher rate, then in the future you're going to have to pay more money. So that's going to only increase the debt servicing burden, which is already very high. And that's exactly what's happening right now. So investors aren't the only ones that are nervous. Even Moodys, the credit agency, which we discussed before, is ringing the alarm bells. So after a winning week for stocks, Moodys, the credit agency, downgraded the US credit rating because they believe that the current interest rate and the capabilities of the US to pay off its debt poses a new and very big challenge for the United States. So Lisa is saying, this is why I don't hold my trades overnight. The US credit rating was downgraded. Mondays should be fun. So why is she saying this? The markets are unpredictable. You know, you might have a few really great days or a few really great weeks, and suddenly news like this comes out and the market gets spooked. Fortunately, afterwards, after this news announcement, yes, the market dipped, but we had one red day, maybe 2 red days, and afterwards the market started to pick up. That was when Bitcoin actually rallied and formed a new all-time high. So just keep in mind that yes, the market is news-driven. A tweet by Donald Trump can move the markets. An announcement about a new trade deal can move the markets. An announcement about a credit agency or a bank, those things can move the market. But keep in mind, those are all just short-term fears or short-term periods of greed. Over the long term, the market tends to go up if you're positioned in great assets. So this is what happened. Moody's downgraded the US credit rating. At the same time, JP Morgan, which is one of the most respected banks on Wall Street, upgraded Bitcoin's prediction over that of gold for 2025. So Bitcoin is made for times like these, times of uncertainty, times of inflation, times where money gets printed out of thin air. So here you see this diagram. So Moody's, which is that credit rating agency that we've been talking about, has downgraded the US government's credit rating for the first time since 1917. So here you see a timeline of the past 100 years. So in the past 100 years, the US had a AAA credit rating, the highest possible credit rating, all the way through all of these terrible world events, the post-World War recession, the Great Depression, World War II, the Korean War, the Vietnam War, the decoupling from the gold standard, the Volcker disinflation and double dip recession, the oil crisis, the dot-com burst, the global financial crisis, the pandemic. But now the Republicans, now with everything that's going on in the market right now, in the first time in 100 years, Moody's downgraded it to AA1. So this is lower than Australia. So this means that according to Moody's, you as an investor might be better off buying treasuries from Australia than the United States, at least from a risk perspective. So what does that say about the trust in the USA right now? It's not looking that great. So China started the fire because they were dumping these bonds on the stock market. And now others are throwing fuel on it. So everyone is jumping ship on US debt. So the top 10 sovereign holders of US Treasury securities, March 2025. So Japan is the number one holder. UK is the second biggest holder. China is the third biggest holder. Then we have Canada, Belgium, Ireland, France, Taiwan, India, and Brazil. When I first saw this chart, I was a little bit confused about Belgium because Belgium is such a small country. And I was wondering, how is it possible that Belgium can actually hold so much US debt? How is it able to pay for all of that? Because its economy isn't that big if you compare it to other economies like China, Canada, France, Taiwan, India. But what I realized is that actually Belgium is like an intermediary or a custodian. So they buy on behalf of funds, sovereign wealth funds, or other countries. So they're more like an intermediary. So Belgium doesn't necessarily hold that, but they're doing that on behalf of others. All right, by the way, if you're watching this video and you think that all of this is useful, that this is alpha, that it's helping you to get a better understanding of everything that's going on in the world, then do one thing. Smash the like button and subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the financial system so that you can position yourself for maximum profits. Now let's continue. So here's this other tweet by Peter. And Peter is saying that Japan threatens economic war with America by dumping treasuries to crash our banking system. Japan is playing with fire. Maybe it's time for Trump to clarify the military relationship. So Japan is the number one holder of US debt. The relationship between Japan and the US is very interesting because after the Second World War, literally the United States nuked Japan. And afterwards, they made a deal with Japan that they were going to demilitarize and that the US was going to be in control. The US actually established certain military bases within Japan so that Japan will never get another military force again. And as a result, Japan didn't have to worry about military spending anymore. So what they did instead was to use that capital to invest in their economy. And this resulted in a massive economic boom. They called it the Japanese miracle. And Japan actually became very wealthy because of the relationship with the US and its military protection. And as a result, there's this mutual relationship between Japan and the US, and they're a very big holder of US debt. But yeah, right now, Japan is actually in a lot of trouble themselves. So one of the only ways for Japan to maybe get out of that trouble is to dump US bonds. And that might bring the US into further problems because this could further increase the interest rate for the US because the bond yields will increase from that. And it's not because Japan probably wants to do this, but because they don't have any other options right now. They're really struggling. Here is another tweet. It says, worth considering Saudi Arabia, UAE, and Qatar bought peace in the Middle East. Asset stripping America of some of its most valuable assets while it is in distress. Right now, before the US faces a $10 trillion debt rollover. Yeah, that's true. So the rich understand that the best time to make deals is when there's financial distress. So Saudi Arabia and those Gulf countries, they're sitting on a lot of money, on a lot of oil money. So for them, this is time to make great deals. Here, Wall Street Journal saying Treasury yields mixed amid a US fiscal scare. Yeah, basically this is talking about the point that right now, a bunch of different countries are dumping US Treasuries. This is increasing the bond yields, and this is further putting pressure on the US to pay off its debt and to service its interests. So yeah, longer dated US bonds sell off after rating cut. So imagine that you are a holder of 10-year, 20-year, 30-year US debt. And if you're already seeing that the US is struggling right now, then the longer the time frame that you have for the US to pay back their debt, the bigger the problem or the risk for them to actually pay you back in the future. So many of those long-term US bonds, they're panicking because they prefer to have cash right now and have less risk than to wait for 10 years or 20 years or 30 years and to potentially not get paid back in the future because the US went into a debt spiral and went bankrupt. So with buyers stepping away, only one option remains. And that's usually the Fed. So the Fed, the central bank of the US, is the last one holding the bag. So you can track the balance sheet of the Fed, the total assets of the Federal Reserve, and actually the balance sheet of the Federal Reserve has been shrinking after excessive money printing after the global pandemic. They started to shrink their balance sheet again to gain more control over inflation. But at this point, there is almost no way out. So the Fed is set to buy another $42 billion in 10-year Treasury bonds today. Quantitative easing is back on table. So here we saw a period of quantitative tightening, meaning that the Federal Reserve is shrinking their balance sheet, and quantitative easing means that the Federal Reserve is increasing their balance sheet. So when that happens, liquidity is being pumped into the financial markets. And when more liquidity is being pumped into the financial markets, that's generally really great for assets, real estate, stocks, bonds, crypto, and in particularly for Bitcoin, because Bitcoin is almost a direct proxy to liquidity. When liquidity goes up, usually 6 months later, Bitcoin tends to directly follow the same trajectory as that liquidity. So yeah, the Federal Reserve is going to print our bags. Papa Powell is going to pump Bitcoin. And at this point, there's no other way out. There's no other way out. The money printer needs to go on. And that means Bitcoin will go up and that we're going to have exciting times ahead, at least if you are not holding cash. When you're holding large amounts of cash, you're going to see your purchasing power being wiped out due to inflation. But if you're holding great assets like Bitcoin, you're going to profit from this. And whenever the Fed prints, Bitcoin starts moving. So yeah, we're now in a very interesting place in the market. Q2 is showing to be very great. We're in the green. We're making profits. We are at a new all-time high. The money printer is going on. The US Fed pumped 43.6 billion into treasuries in 4 days, a stealth move of quantitative easing, the money printers warming up, and when it does, assets like Bitcoin are usually going to go up. So the rocket fuel is here, guys. Exciting times ahead. So simple ways to explain Bitcoin to friends. Because if you're like me, you want your friends and your close, your loved ones to win. And at this point, this is the perfect time for them to hedge themselves or to protect themselves against what is going to happen in the next few months. Because fiat money requires virtually no work to produce. 𝗶𝗶𝗀𝗶𝗺𝗶 can simply create it out of thin air. That's what central banks can do. They can literally inject money and they can create it out of thin air. They are responsible for the money supply. And they can increase the money supply infinitely, forever. They can keep printing more and more money. So why should you work for something that they can print out of thin air? Bitcoin, on the other hand, is a lot more difficult to produce. There will only be 21 million Bitcoin, and in order to mine Bitcoin, you need to have special equipment and you need to have access to electricity in order to process transactions on the Bitcoin network and to earn Bitcoin. And there will only ever be 21 million Bitcoin, so there's no bank, there's no government that can gain control over Bitcoin as an asset. And as a result, people are flocking to this truly scarce asset, Bitcoin, because they want to hedge themselves against money printing, inflation, and stupid decisions by governments around the world. But this time, it's not just about money printing, it's much bigger than that. This is not your old school debt crisis. We're seeing that, let me check this chart. So global debt is going up very rapidly right now. Governments, central banks are addicted to printing money, borrowing money in order to keep their economies afloat. And debts as percentages of GDP, so economic outputs of countries, is also increasing over time. So we went from 320% in 2016 to 333% in 2024. So overall, economies are going more and more in debt. And when that happens, then yeah, we're going to see some nasty stuff, because just like not being able to pay your mortgage because the interest rate is too high, governments also need to service their debt. And when interest rate is too high, they may drown in their debt servicing requirements. And then countries go bankrupt. And then we have more uncertainty and more fear, more panic. But what asset is best positioned for those times of uncertainty? Bitcoin. Bitcoin is a truly scarce asset. Only 21 million Bitcoin will ever be in circulation. No government can touch it. It doesn't care if BRICS wins, if the United States wins, if China wins, if Brazil, whatever country becomes a new world power, Bitcoin will remain. And as a result, it's a safe haven asset. It's a safe haven asset of our age, of our generation. So that's why I think it's going to be a very interesting time. And here you see that national debt has skyrocketed. And we keep on increasing debt ceilings, and central banks keep on printing more money. Here you see a tweet by Swan. So the Fed isn't in control anymore. We've entered a new regime where the deficits dominate and monetary policy plays second fiddle. So what does it mean? First of all, you need to understand the role that the Fed is playing, the central bank of the US. They are in control of the money supply and they're in control of the interest rate. But at this point, the debt is so high that the Fed is not in control anymore, because if they don't act in a certain way, then the US will simply drown in debt and it will be the end of the US. So instead of the US being the Federal Reserve being proactive, they are now reactive, and they have no other option than to do what is necessary to save the US. And that's to print more money. And when more money is being printed, Bitcoin will pump. So here are some of the top 20 entities that are holding Bitcoin right now. Coinbase, Satoshi. So Coinbase is holding 2.2 million Bitcoin. Satoshi, somewhere around 1 million Bitcoin. Binance, 600,000 Bitcoin. This is an old dated chart, I believe. November 2024, yeah, that's right. So right now, we have, of course, MicroStrategy and BlackRock. So MicroStrategy holds around 550,000 Bitcoin, BlackRock 600 something thousand Bitcoin, Binance holds a lot of Bitcoin, Coinbase holds a lot of Bitcoin. But Coinbase and Binance hold Bitcoin because they're reserves on the exchange, not the reserves that they're actually holding as a treasury, I believe. But yeah, corporate entities are now stacking lots of Bitcoin. So big players are already making moves. They know that instead of holding fiat, so euros, dollars, yens, pounds, they are much better off holding Bitcoin, because with the current economic environment, Bitcoin will probably appreciate and fiat will depreciate. So here you see Bitcoin ETF net daily inflows. So here you see billions of dollars are currently flowing into Bitcoin spot ETFs, meaning that within the traditional financial markets, there's also a lot of demand for Bitcoin, and a lot of traditional investors, institutions, corporations, banks, sovereign wealth funds are also betting on Bitcoin as a safe haven to protect themselves in the next few decades. Here, another tweet by Bitcoin Insights, US spot ETFs weekly update ending 16th of May. Weekly inflows of $603 million, cumulative net total inflows of $41.7 billion. BlackRock's IBIT ETF with over $1 billion of inflow last week. In short, so much money is flowing into Bitcoin right now. So BlackRock's global allocation fund raises Bitcoin exposure to 1,810% over 12 months. So that's saying something, you know, if BlackRock, the company that owns the world, if they are heavily positioning themselves in Bitcoin and telling their investors to do the same, then probably that means a lot. So the bigger the dump, the harder Bitcoin pumps. And with dump, we mean the value of fiat currency, because with money printing and governments going into debt, here you see the blue line is the federal debt, so the US debt, and the black line is Bitcoin's price. So you see that they're very proportional to each other. As debt goes up, Bitcoin tends to go up too. So yeah, that's just another chart showing this great relationship. And usually Bitcoin is lagging. So first money gets printed, liquidity gets injected, and then a few months later, Bitcoin tends to follow. And here is this video. Bitcoin is the exit ramp. So if you're done with this system where you're working for fiat money, which they can simply print out of thin air. So you're working very hard for it and they print it and you lose. You are the loser of money printing. The middle and the poor, they're losing. Because if you're holding money in your bank account, savers are losers because the interest rates barely outpace the inflation rate. So probably you're losing and life is becoming more difficult. With the same amount of money, you can buy less products and services in 1 year, 2 years, 4 years, 5 years, 10 years from now. That's why there's no other option left than to buy Bitcoin or to invest your money in other assets. But here is a comparison between the performance of Bitcoin versus other major asset classes out there. So Bitcoin, the S&P, and US Aggregate Bond Index, the Dow Jones Commodity Index, the Dow Jones Emerging Markets, US High Yield Corporate Bonds Index, and the S&P 500. So here you see that in these 10 years that were measured, or I believe they're 11 years, Bitcoin was the best performing asset 8 out of the 11 years. So that says enough. Statistically, you are much better off in Bitcoin compared to those other assets. And I often get the question like, hey, Mitchell, is this the end of this bull market cycle? Are we soon going to enter a bear market? And to me, this doesn't feel like the end of a cycle. It feels like the start of something much bigger. And this might be Bitcoin's shot at the moon. I do believe, we're seeing all of these Bitcoin price predictions out there. Some are saying 150,000 to 200,000. Some say 250,000 to 1 million. We're hearing a very wide range, but with everything that's happening in the world right now, I do believe that a multiple $100,000 Bitcoin is definitely on the table. The fundamentals are gearing up for an explosive run right now. It's very simple. It all comes down to a mathematical formula of supply and demand. Supply is very limited and demand is skyrocketing. And that only means one thing: we're going to enter a massive bull market right now. So guys, I hope that you enjoyed watching this video. If you did, then do me one quick favor, smash the like button. That will be good feedback for me to understand if you got good value out of this video and that I should make more videos just like this one. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on and to position yourself for maximum profits. All right, thanks for watching. Peace out, take care, and I'll see you in the next one.